camping out. Okay, people have been camping out all night for the release of the newest Nintendo console, the Switch. The company has a lot riding on its new game console as the Japanese game makers hope to regain favor. But with a host of cautious reviews and an opaque roadmap from company officials, there is some unease among investors, with shares down from $32.10 to $26 since December. The release of the Switch will also see an end to the Wii U that sold just 13.56 million units worldwide. Officials in the United States have raided 3 Caterpillar sites in Illinois as part of a criminal investigation into tax irregularities. The heavy machinery manufacturer said the raids were linked to profits from Swiss subsidiary Sisal. Caterpillar is accused of shifting billions of dollars of profits abroad to avoid paying taxes in the U.S. The raids have resulted in the company's stocks falling sharply, closing down 4.3%. It comes as the Trump administration plans to overhaul corporate taxes to keep jobs and profits inside the U.S. The federal government has filed fresh charges against 2 multinational oil firms for alleged complicity in the Malibu billion-dollar scandal. The charges were filed at Abuja High Court against the oil majors Shell Nigeria Exploration Production Company and Ajip Limited, along with 9 other individuals and firms. The Federal High Court granted an order of interim forfeiture of the OPL 245. However, Shell and ENI have since appealed the order, asking that the block be returned to them. Both firms paid the $1.1 billion into a Nigerian government account in 2011. Now, US President Donald Trump's policies are being credited as part of the reason for the rise in the country's stock market. Although many financial analysts say they still would have expected stocks to rise even if Trump lost the election, but perhaps not to the same degree. The Standard & Poor's index has leapt 11.3% since election day, packing more gains into 4 months than it's had in 4 of the last 6 full years. Well, more business news now, and one of the most eagerly awaited initial public offerings of the past year, Snap, has lived up to all the hype. The shares soared by approximately 35% on the first day of trading after the owner of the Snapchat social media app raised $3.4 billion in its keenly anticipated IPO. That gave Snap a market value of roughly $28 billion before the start of trading, the richest valuation since Facebook floated 5 years ago. Well, earlier my colleague in London, David Glencorse, spoke to Arise business analyst Bode Oshosami about the deal and started by asking, is it really worth that much?
Snap is a company offering a photo-sharing mobile app, founded only 7 years ago, and the IPO we heard gave a market valuation of close to $28 billion. The founders, who are under 20, in their 20s, are close to $5 billion in terms of their net worth, both of them. So it's incredible, but if you really look at it, it's an interesting application targeted at the millennials. I understand 158 million people open the app on average 18 times a day, and over half of them sending snaps and messages and creating a story. So it's really very popular with the millennials, but that doesn't justify such a huge 40% surge in the market price on day one. But the market is also very, very if you like, friendly at the moment for IPOs. If you look at the factors, one, very high asset prices, volatility is generally low, interest rates are also stable. So that kind of environment, especially high asset prices, makes IPOs very attractive, and I'm sure we're going to be seeing a lot of IPOs.
Was it priced too low?
I don't think it was priced too low. I haven't studied the numbers. I think it's the hype around the moment. People already...
Certainly that.
Yeah, I think there's a lot of hype in the market. Mind you, it could go down. Twitter, you remember it went up 70% on day one, much more than 40% of Snap, and then now it's 40% below the IPO price. Facebook was so-so on day one, but you know it went down 30% in year one, but now it's about 259% above the IPO price. So these things go up and down. Obviously, Facebook is becoming passé for the millennials, and I hear, you and I don't understand what it is, but I hear this is
My
the
son
new thing.
certainly
Have you
does,
seen the
yeah.
spectacles?
Yeah.
It's awesome.
Yeah.
But it just shows that the tech market still has a long way to go in terms of what's possible.
I was listening to our business correspondent there, Laurie Laird, a little bit earlier, and she was making the point that shareholders have no voting rights whatsoever, and she was saying that this goes against the whole principle of a public company. What has that got to do with it? I mean, people are still buying into it.
People
well,
are still buying. Even apart from that, they're also not declaring a profit. They made a loss of about $515 million last year. They're on revenues of about $400 million. That sounds odd. Why would you invest in a company that made a loss of $500 million? But people are seeing the future. They're saying it's just a feeling that this is the thing to get into. You just have to buy into it, and it'll turn out right in the end. That's the only way I can explain
but you're
it.
saying that all of this to do with Snap and Snapchat, it can't be sustained.
Well, it's difficult. I can assure you, if I had $4.3 billion like Evan Spiegel has, I would quickly sell as fast as I can.
Yeah,
but you know, I'm not as smart as the others. I don't think it can be sustained.
But you're still saying...
It will go down and probably go up again if its value proposition improves. Mind you, there are other things you can do with many of these devices, all kinds of consumer-to-consumer possibilities on this platform, business-to-consumer possibilities on this platform that could eventually make it even more compelling in future. So the fact that you have all these people available for you in such a continuous basis to market, to advertise, to trade, to do things with, is like a platform that interests the market, and they see that it's going to go very far.
And there's still an awful lot of money to be made on these platforms. A lot of tech IPOs up and coming, I suppose.
I think that we're going to see a lot of tech IPOs. Definitely there's a lot of money in the market as well, obviously. Otherwise, you wouldn't see these kinds of record-breaking figures. The liquidity in the capital market is at a record high. When that begins to change, we may see crashes. I'm not predicting doom, but you know, some people are, obviously, but we need to see what happens.
And there are not even profits to be made from this. I'm talking about Snap and Snapchat.
Yeah, they're not making profits now, and they're not even proposing huge profits. They're just telling you, look, this is a fantastic idea. You all know about it. We are going to be the new in thing for tomorrow, and the millennials love us. And it's an exciting, but you also have to understand the tech market. Everything is possible. So they are betting on innovation. They're betting on entrepreneurial, on entrepreneurial spirit. They're betting on the ability to come up with something new, something profitable. So these are hard, they're hard to hold, but obviously the market must know something.
Well, we're heading for a short break now, but there's plenty more still ahead, including all the sports and entertainment news. Stay with us.